$20,000 becomes a new resistance for the BTC price, despite the fact that many indicators are screaming buy. Analysts share their views on the future of the Bitcoin price. When Bitcoin was over $60,000, the smartest analysts and financially minded people were telling investors that BTC would never fall below its previous all-time high. These same people said $50,000 was a buy on a fall opportunity and $35,000 was a buy on generation. Later they also suggested that BTC would never fall below $12,000. Of course, now is a great time to buy at the peak, and one would think that buying BTC at $10,000 or lower would also be a purchase of a lifetime. But by now all the so-called experts have gone silent and are nowhere to be seen or heard. So investors are on their own and wondering if their bottom has been reached. Should we be patient and wait for the predictable fall to $10,000, or now is the time to buy Bitcoin and altcoin? Generally speaking, naming a price bottom is a futile exercise. What really matters is to focus on whether there are fundamental reasons for choosing to invest or not in Bitcoin. Sure, the price has reached a lot, but have the fundamental of the Bitcoin network and the infrastructure surrounding Bitcoin as an asset improved or worsened? It is important to zoom in on this data because it is what investors should base their confidence and investment phases on. According to Blockware solution analyst Joe Burnett, the price of Bitcoin is highly dependent on Federal Reserve policy and its impact on equity markets. Burnett said, "Clearly the macro environment has a strong influence of the Bitcoin price. High CPI inflation has led to aggressive Fed policy since November 2021. Higher interest rates inevitable lead to power price for all assets. Interest rates are essentially gravity on financial assets, just a discounted cash flow analysis. And these rising interest rates are the Fed attempt to destroy demand and destroy inflation. It is obviously putting pressure on all risky assets, including Bitcoin." Asked about the Bitcoin hash tape chain indicator, indicating that BTC has bottomed out and miners have capitulated. Confirming that Bitcoin has bottomed up, Burnett said, "I think with any chain type metrics like that, you definitely have to take it with a grain of salt. You can't look at them in a vacuum and say, yes, the bottom of Bitcoin has been reached." Burnett said, "If your stocks hit new lows, I certainly expect Bitcoin to follow. That said, if you look at the fundamental of Bitcoin itself, I think minor capitulations tend to mean Bitcoin bottoms. And the hash rate based indicator that Charles Edwards created basically shows that there has been a capitulation of miners this summer." Discussions about the growing partnership between big energy suppliers, oil and gas companies and industrial Bitcoin miners have been a lot of topic throughout 2022. And when Colin Hart was asked about the immediate benefits of this relationship to Bitcoin itself, he said, "I don't think mining does anything bad or good for Bitcoin. I think it's good for Bitcoin in the sense that it's really going to strengthen the security of the network in the long run, decentralize mining and put it almost every corner of the globe if you have energy producers to mine it. But in terms of how it will affect price, I think it's just more widespread adoption. And also whether people will use it day in and day out as a medium of exchange, a store of value and just general investment." Harper added, "If these companies really start mining it, then it becomes more acceptable. It becomes less stigmatized, depending, I suppose, of the oil producers and the politics of that person." When asked what mass acceptance of Bitcoin might look like in the future due to the growth of the mining industry, Harper explains the following. "It's just a matter of time before they start integration Bitcoin into their stocks. And I think that's when the situation will become interesting in terms of mining as an industry. Because if you have energy producers and people owning energy that are mining Bitcoin, it will be very difficult for the people who don't have those assets to end up profiting. Because you will see a hash price that is already trading in the opposite direction. Ultimately, you can imagine a future where only energy producers and those who are investing in or embedded in energy producers will be able to profit from Bitcoin mining. Regulation and the growing desire to self-sufficiency will drive the growth of the Bitcoin Lightning Network." Both analysts agreed that while it takes several years, the potential for second-tier Bitcoin growth is very strong. Burnett predicted that over time more and more people will be learn to demand the final settlement for the Bitcoin, which means more and more people will hold their own key. fees. According to Burnett, if acceptance of Bitcoin grows by a factor of 100 or 1000, the competition for scarce blocks pair will be much greater, and the commissions on the chain will probably grow simply because people will demand much more settlement. Many times more settlement at the basis level. But the blockchain's pair for settlement at the basis levels is fixed, so the growth of these intra-chain fees, in my opinion, will potentially make the liquidity of the Lightning channels that's already open and available. It will take it more valuable. Harper fully agreed and added that in his view, the Lightning network will be something that will allow Bitcoin to be used as worldwide medium of exchange. And also, as Jack Mallers put in, is something that will separate Bitcoin, the asset, from Bitcoin, the payment network, in a way that's really scalable. It is important to understand that what has happened with cryptocurrency in the past does not guarantee a repeat of the situations of the future. So this version of Analysts may well fall. However, at the same time, it should be taken into account that the investor shops the market situation, and wise players behave most identically. Hence, there is similarity in the movement of asset rates. Therefore, this assumption of investors should be taken as one of the possible scenarios of market development. So thank you for attention. You were on Crypto Happiness channel. See you later.